What's up, guys? Zachary here, and today I'm going to share with you, in my opinion, the biggest stock market dangers coming up in the near future. Now, of course, I am not a financial advisor. I cannot give financial advice. If you need financial advice, please speak to your personal financial advisor. So for some background, the Fed began purchasing bonds in 2020 when the COVID pandemic was raging for the first time in the United States. And what this does is it puts a buying pressure on bonds, which, by the way they work, keeps rates low. And this also, with the low rates and the buying pressure, encourages investors that would normally buy bonds as a safe way to store their money and let it grow over time to take more risky endeavors with their money, and this usually encourages them to go to the stock market. Since these investors are not going to the stock market, the price of those assets usually increase with the buying pressure that is now there. So as you may be able to tell, with all of the new buying pressure in different markets, this over time will lead to, at the very least, asset price inflation, where valuations and prices of different assets go up extraordinarily over time. And so recently, to combat that and consumer price inflation, the Fed has announced that they are going to start reducing the amount of bonds that they're buying every month. This tapering of the asset purchases was originally designed to be relatively slow, ending mid-2022. However, they came out recently and said that based on the economic environment of the time and how a lot of the conditions have been met for their tests, that they will consider ending the taper several months earlier than originally anticipated. The reason that this is important is because usually with the taper, the stock market will react by falling in price as people take their money out of a more risky asset and transfer it back into bonds that are deemed as much safer. And so the slower that the taper happens and the more time it takes, the less pain, or at least the more subtle the initial shock will be to the markets, basically padding the feeling of money loss and things like that over the course of the taper. However, now that they're speeding up that timeline, the initial shock and drop in price could be much worse. However, there is another thing that the Fed is going to do that could also negatively impact the stock market in a great way, and that is raising interest rates. So the Fed, being basically the bank of banks, they have the authority to set what's known as the federal funds rate, which is more or less the interest rate that banks charge each other when they lend each other money for liquidity and things like that. It gets really complicated. I'm not going to go into all the details of the system. However, what is important to know is that during the pandemic, that rate was dropped to basically zero. So money could flow freely, literally, from banks back and forth to provide liquidity. And so after the taper, the Fed is planning on raising that federal funds rate, which will make it more difficult, or at least cost more, for banks to borrow money from each other. This rate basically also helps determine how cheap money is in the economy. And as kind of discussed before, since the stock market really likes, and some would say is addicted to, cheap money, the higher the rate goes, especially over a shorter period of time, the faster that the stock market will fall in reaction to that. However, it is possible that the Fed may change course as things developed, depending on how the markets react. For example, in 2018, the Fed was raising rates and the stock market began to lose a lot of value, and they eventually stopped raising rates and kept them steady up until the pandemic, where they lowered them back to zero again. Though, if the Fed were to get into this mindset, they would basically be stuck between a rock and a hard place of crashing the stock market or letting inflation run rampant and reducing the value of the dollar extraordinarily. And so basically, the Fed will have the choice between saving the markets or saving the dollar, and who's to say what they'll actually choose in the end. But that is another thing to take into consideration when discussing the Fed and how they'll impact the markets. And so, in conclusion, in my opinion, the biggest risk and biggest danger to the stock market in the near future is going to be the Fed and their actions and how they handle inflation and the taper and raising rates. Since both the taper and raising rates themselves can negatively impact the stock market, both together over time could have a great impact. However, even if they do decide to raise rates, and even to a much higher level than previously seen in recent history, I believe that any massive dip or crash in the markets would inevitably be just temporary, and that we would go back to a bull market in a few years at worst. And so basically, I'm going to be keeping an eye on the Fed and would encourage you to do the same, and just to see where they take things, and then you can make financial decisions based off of that yourself. So if you enjoyed this perspective and found this video helpful, feel free to share it with someone else who you think would get value out of it, and don't forget to subscribe. See you in the next one.